Hello, everyone. Welcome to GreenSky episode 13. We have our guest Jeff Brunet with us. Jeff is our new managing partner with GreenSky Ventures. We had two episodes before this where Jeff walked us through his experience as an entrepreneur, and then we dove a bit deeper into his experience with exits, trying to share a bit of that experience with entrepreneurs as they're building their businesses. And in this episode, I want to shift the conversation toward the investment side of things that Jeff is involved with, the transition that he made from being an entrepreneur and operator to more of a mentor and then investor, and then ultimately joining GreenSky. I guess we can start with Jeff, maybe a very short intro. Folks had you for the past two episodes, but I want to make sure that those who are just listening to this one have a bit of background about you as well.
Sure, sounds good. Jeff Brunet. So my background, as Moien mentioned, really is founding and operating and selling tech companies. I founded 5 companies over my career. After my first few exits, I became quite an active investor. So invested in a number of private companies and took usually an active board role in those businesses.
Great. And so, Jeff, maybe we can start with what happened that you joined GreenSky. You were investing before. What made that transition? What is the history there?
Yeah, it's a good question. So I'd been investing, call it 20 years, 25 years as you'd call it an angel investor. And my track record there was pretty good. Had some good exits. I gravitated towards very early stage. Over the years of creating companies and investing companies, you develop a network and you get some level of deal flow. So there were opportunities to get into some early businesses, and that's how I met GreenSky. Was one of the companies that I invested into and ended up becoming chairman of was a company called Ethica, and Ethica is now a portfolio company of GreenSky's, but we were out looking to raise money. This is roughly a year ago or so. And we were talking to a number of venture groups, both in the US and in Canada. We pitched to GreenSky. Alan, the CEO, got to meet a few of the GreenSky team. They hit it off well. I spent some time with the team from GreenSky. And long story short, GreenSky ended up investing in Ethica. And throughout that process, there's nothing like getting to know someone through a transaction like this. And so we obviously worked very close together, both in structuring the terms of the deal, the valuation in terms of the deal, but also the due diligence. And I was thoroughly impressed by a couple of things. One was the level of technical due diligence that GreenSky was able to kind of bring to bear. You compare that with me as an angel investor, and I'm quite technical. My background is in technology, particularly AI, for the last 10 years. But I could go nowhere near as deep as the GreenSky team was able to, and produced this incredible diligence report that was eventually shared with us on the Ethica side. That was kind of the beginning of an aha moment for me. I started to spend more time with the team after the Ethica deal closed. I think during that process, I got to know the GreenSky team quite well. We kept talking. I started to get a bit more involved and join some of the partner meetings and spend time on the review meetings. We did that for a number of months. It was really a trial run on both sides to get to know each other, understand. I think for me, it was understanding how GreenSky evaluates companies, how deal flow works on the GreenSky side, and then post-financing, how do they operate and support portfolio companies? And those 3 main areas over those number of months together that we explored. And I think as we got to know each other, I really enjoyed my time with the team. for me at my stage in my career and my age, nothing matters more than the people you're working with every day. Right. And it was crystal clear right from the time we met the team at Ethica that it's such a smart group of people across very, very diverse fields. You have incredible depth in finance. You have incredible depth in, you call it deep tech and material science. You have incredible depth in, the legals, M&A. You have incredible depth in operations. It's just, there's a wide variety of depth there. And I spent a lot of time investing alongside venture funds over my career, working with investor funds. I was hired by funds to do due diligence in the earlier parts of my career. But it was just a different playing field, I think. And so a number of things struck me. One was deal flow. And I thought I had pretty good deal flow, early stage deal flow. I would see a lot of businesses and get referred a lot of companies. Within a couple of weeks of spending time at the GreenSky review meetings, it was crystal clear. Like I had a speck of the deal flow compared to what you were seeing. And these were great companies. It wasn't like you were seeing, 50 companies and 49 of them were duds. The companies that were coming through every week that had been brought through were interesting companies. So week over week, we're sitting listening to good founders pitch these interesting businesses, and it's exactly what I was looking for. So deal flow was a huge check mark. The second one, around investing, I think was important. And I lived this firsthand through Ethica. Being on the other side was really valuable to see how the negotiation worked. I think it's really important, and we've talked about in some of the other podcasts, the relationship that founders and investors have, making sure that everyone's on the same page, understands what success and not looks like. And so watching the negotiation with Ethica around valuation, around founder ownership, struck me two ways. I think the negotiation was very fair. The valuation was done at a level where it was fair, but there was also a lot of consideration to, is the team motivated enough? Does the team have the right structure? And that, as a career founder, impressed me a lot. You don't see that enough in venture in my mind. And then there was the third leg, which is the post financing operating of the portfolio companies. And that's where at GreenSky, where I am able to spend a lot of my time is kind of bringing that experience, my operational experience, to bear in helping portfolio companies at various stages, the ones that are knocking it out of the park and looking at M&A as we've been talking about, or the ones that are struggling, as every startup tends to do at some time or other in their life cycle. And so that was, I think, highly attractive to me in the way that we engaged with those companies. It wasn't the venture fund stepping in and pushing people around. It was a collaborative discussion on where are we, where do we need to go, how do we get there, and what can we do to help. And that, it just resonated with me being on the other side of that conversation so many times that, I think everything just clicked, and that led to the decision first to invest in GreenSky's Fund 6 as an LP. That was step one. And then step two was to continue spending time with the team, and eventually we got both comfortable enough with each other to say, let's, I was comfortable making a full-time job out of this. And I think the same, the team had comfort that I was going to be able to add the right amount of value to GreenSky. It's been great so far. It's been about 6 months, and it's been a wonderful 6 months. Like, very similar to running a startup. It's seldom not stressful, but it's a great kind of stress that I wouldn't trade for anything.
Yeah, I mean, I might be biased here, but when I'm pitching GreenSky to startups or LPs, essentially when it gets to the team, I tell them we have a very diverse team with a different set of backgrounds and skill sets. Please do take a look at our team page on our website, just because it's like very diverse abroad, and it's going to take me a long time to pitch to you everybody in the team and their experience and the skill sets. But as you mentioned, we have from the beginning of, let's say, life cycle of investment, we have a lot of eyes and hands in different organizations and ecosystem partners to bring in the best deal flow. Once we are going through the investment decision, we have a lot of the skill sets and experiences, and both technical, legal, financial, around the table to help us evaluate the company in a startup and deal. And then once we make an investment, it's obviously that's the beginning of this whole collaboration. And like we have people in the team with a lot of experience who would go and support the company, and they're as active as the company pulls, and we are as passive as the company wants. And then ultimately at the end of this life cycle, when it gets to an acquisition or something that is of that order, then we have someone like Mike Liss who would go in, negotiate, have conversations, guide the founding team through the conversation, which is I think is something that is definitely rare across other VC funds in Canada, at least. I haven't seen that, and I think being able to cover that life cycle of investment from beginning to the end with this team is definitely one of the biggest differentiators that GreenSky has.
Yeah, I would agree. And I would say throughout my career, I've seen a lot of investors step in, but stepping in and being very good at it are two separate things. And I think what I've seen at GreenSky, again, very similar to a startup, is that there's nowhere to hide. So you know exactly what you're working with, you know exactly the skill sets that people have around the table, and it's a smart group who can add a ton of value. And it really reminds me of operating a startup in the early days, right? You know exactly what you've got, and that I think that attitude and philosophy, like you say, extends over to how we engage with the portfolio companies. And it's a good point that you made as well. One of the best relationships you can have is provide help when you're asked for it. And you know, I think from my perspective, maybe it's a biased view, but no one knows the business as well as the founders. No one is 100%. Living it day in, day out, sucking up all the market information, you know, just living in the trenches. So to assume that someone knows more about the business than the founder is it's a bad place to start. Where experience can come in is we've done 30 deals. Here's what we see. Here's what to watch out for. Here's what I'd recommend. And it's that's the valuable advice that we can bring to bear. Not as much tell you how to run your business, which, you know, you do see depending on the geography. In some geographies, the venture funds are a bit more hands-on. And
I guess the other thing that GreenSky does is that we cut larger checks and stay way more focused than compared to, let's say, spraying and praying. We could potentially write checks to like 50 or 100 companies, but we rather write checks to 30, 35 companies and stay more focused and supportive throughout the life cycle of those investments.
Yeah, I mean, that was a large part of why I became an investor in the fund, is exactly that. I think that style of operating leads to better outcomes than the spray and pray approach. You can get lucky and you invest early into a massive win. It's a little bit like playing the lottery. You might get lucky, you might not. Being very mindful about the entire portfolio when you invest, writing bigger checks and staying with the company through their life cycle. Again, looking at it from a founder view, like that's what you want as an entrepreneur. You want someone who is going to be there in the seed round. You want someone who's going to be there to write you a check in your Series A. You want that trusted advisor who's going to be with you through the life cycle of the company. And most important, you want them to be there when things are tough. And time again, there are lots of great investors out there. I've been lucky enough to have a lot of them invested in my companies. But like any profession, people are different and they have different views. And a lot of investors, especially the spray and pray types, they don't have the time to get involved when things are tough. And the fact that you have a group of people around the table with the expertise that GreenSky does, compounded with the fact that we're willing to help and get hands-on, it's hard to articulate how valuable that is. It's a huge asset. And until you've been through it, either getting ignored by people around the table when you're having trouble because they simply don't have time, they're focused on the companies that may be the home run. Until you've felt it, it really is hard to articulate how important that is. Having someone that you can reach out to, that you trust, that you're not scared to share bad news with, and work through problems with. It's a huge advantage in helping a company win. And again, it's a big part of why I put my money into the fund. I just believe that's the likelihood of a positive outcome goes way up when you have that dynamic.
And I think what you mentioned from the perspective of an entrepreneur, unless you feel it, you don't really understand. Essentially, what you said has a lot of weight is the fact that let's say you go to the board meeting, investors who have invested, they show up in the board meeting, but they're busy with their other investments, or someone junior with not a lot of experience comes into the board as an observer who just watches, and you can't really communicate with them what are your challenges. You can't really communicate with them that you need advice on various topics, and they are not going to be spending time with you just because they have 100 other investments to deal with, and potentially they think that, okay, their time is not worth spending on your company anymore just because there's probably another home run with a better offer down the line. So, and I've had conversations with entrepreneurs that they tell me that, okay, this is actually what is happening to us right now, is that this big shot investor invested in us, but now they don't even give us any feedback. They don't even guide. They just show up to the board meeting, we present, and everybody nods their heads, and they just leave. And we don't get any feedback. We don't know how to move forward just because we haven't had this experience before, that experience before. And I think being like helpful when help is asked for is definitely one of those traits in GreenSky that allows us to support the companies and be helpful beyond that check. Because I'm pretty sure a good entrepreneur can find money anywhere. That's not a problem. But what is really important there is that, are they going to get value beyond the check to like help them build a business, to help them navigate through the challenges of the business. And having people like yourself who have done it multiple times is just insanely valuable for these startup companies, because they come to you, they're like, this is my problem. And you're like, oh, I've probably seen this 20 times by now. I know what to say. I know what to do. These are probably the things that you have to think about. These are probably the stakeholders that you have to talk to. And like you essentially condense all of that experience into a 15-minute conversation, but it's just so valuable for the entrepreneur that somebody is having their back. Somebody's is there to listen to that bad news and guide them through managing that bad news. Like, I don't know, one day the entrepreneur comes in and says, my co-founder left me. The other day they're like, oh, we're running out of money. The other day they're like, oh, we had this, I don't know, cyber attack or whatever. And like, having lived through that life is just so meaningful when you can, again, spend like 15 minutes with an entrepreneur and tell them, these are the things that are happening. These are the things that you should consider, and just give them guidance on where to go next.
Yeah, it's a great point. And the benefit goes two ways. So I think the advice can be valuable for entrepreneurs who haven't been through it before. Having a trusted advisor you can use as a sounding board. I think probably most crucial that you're not scared to share bad news with. A lot of companies are scared to share bad news with investors because they've had a bad reaction. And so I think if you can maintain the right open relationship where you've got honest communication going, the good and the bad, then you can really help. But second, I think there's a benefit not just to the entrepreneur, but also to the investor. If you have that relationship, you're going to know the bad news. You're going to be able to help the founding team react and manage through it. And that increases the likelihood of a successful investment. So I think there's two real benefits. It's a great setup because there's a benefit obviously for the portfolio company, but there's a benefit for the investors as well, having that dynamic.
I guess we could switch gear a bit. One of the questions that I get a lot from, let's say, potential LPs is that what are some of the technologies that you're seeing these days that are interesting? What is kind of technology or the startup company that you gravitate towards? I'm sure you've received that question. I just want to know what is your answer to this question?
Yeah, it's a great question. It changes so fast. Like the world is, particularly in AI, the world is moving so quickly in technology right now. Every week there's a new massive development that is turning things on their head. And so I think that's needs to be part of the investment philosophy, that we're not investing at the beginning of a trend. For example, we're not going after AI companies that have a new model. They may have an amazing model that may be great, but it's just too early and too risky to be investing in core AI technologies versus companies that are using AI to their advantage. So if we're looking at a business and we see they're using AI, one of the first things I like to look at is what happens if someone comes out with a better version of that model? What happens if OpenAI comes out tomorrow with something that works twice as fast? Is that good or bad for you? If the answer is it's bad for you, then often we will not invest. It's just too early to understand where things are going right now, and we don't want to take those kind of risks. The flip side is AI is moving so quickly, changing so fast, it's getting better and cheaper every day. Companies that are able to use it effectively have a massive advantage and are a great investment opportunity. It depends what kind of lens you look through. So I don't want to say we don't invest in AI, but we won't invest in core AI. That may change, as the market starts to stabilize and slow down. But today we're looking at companies that take advantage of or use AI in a unique way versus core creation and pushing foundational models forward.
Okay, I guess maybe my question should be then, what is your suggestion for AI startups pitching to us?
Yeah, I think you need to be, if you kind of craft the ideal pitch, you can be an AI company that isn't going to be negatively affected as AI continues to evolve. So the worst thing that could happen is you're developing your own foundational model. 2 weeks later, OpenAI or DeepSeek or someone else comes out with something better. And so it's just, even as an entrepreneur, it's so risky. Like, it's hard to sleep at night when you're relying on keeping up with companies that are investing billions of dollars, into the foundational model space. The flip side is if you can show a business that is taking advantage of that, your margins get better as the costs of API calls come down. It's only going one way over the long term. You can do a better job. Your solution gets quicker and more robust and more scalable as the AI models get bigger. Those are companies that are really interesting. Ideally, you would look at, and this is getting more difficult, but you would hope to have some type of competitive moat, whether it's industry expertise, you're experts in a particular vertical and have knowledge that just isn't standard know-how and knowledge in a vertical that gives you an advantage. Do you have a data advantage? Do you have access to a ton of data that helps in a specific vertical that someone else may not have? So one of the things we like to look for is how hard is it for someone else to recreate that? And the answer with AI tools, that answer is changing. And it's easier and easier. In some ways, AI is democratizing software development. And you can argue about where we are in that process, but it's certainly making it easier to compete and create and found software companies. And so the more you can show what those competitive barriers are, data is a great one, of course. Domain knowledge is another one. I think that the better off you are. Another interesting change that I've seen, I think GreenSky has always been relatively open to hardware, but hardware over time goes in phases. Sometimes it's a sexy thing to invest into. A lot of the time it hasn't been, and it's coming back with AI. Hardware provides some of that competitive advantage. It's not easy to build hardware and do it right and figure out your supply chain and manufacturing and get all that right. So hardware and software combinations now are becoming more attractive in venture as AI is starting to muddy the software only playing field a little bit.
Yeah, and I would probably add to that the fact that just like as you mentioned, the landscape of software is becoming completely different. It's really democratized to build software. The cost of developing software is just very low, and I think you're past the days where you would just launch a software and you would have that SaaS subscription money coming in month over month, and you would see like 2% churn, and your net retention rate is 130%, and you're like, yes, you're growing and expanding. I'm thinking that the problems that the societies are facing are just becoming more complex, that just the software layer is not helpful enough. And to be disruptive and really provide a solution, you have to have like a stacked way of thinking about things. Like you might be coupling a bunch of sensors with a software dashboard with an AI platform, and your solution is also probably getting, and this is something that probably folks at Y Combinator don't like, just because you're not niche anymore. You're providing a service that is more turnkey for your customer, and so you're widening the kind of the verticals that you're providing the solution. You're also stacking the technologies on top of each other to be able to provide a wholesome solution. And it's gone the days where you would launch something and you would charge $100 a month per user, and then there you goes your growth.
Yeah. The pace of change is amazing, and I think it's creating opportunities for a ton of new businesses. To start up and do things in a capital efficient way and make sure you've got the right product market fit before you go out and look to finance your business. So there's a lot of positives there. The negatives, like you say, are it becomes very easy to compete in the software space. And maybe to touch on verticals for 1 minute, you talked about vertical specialization. AI is starting to remove that as a competitive barrier as well, where you could say in the past, we are experts in telco. We spent our career in telco. We know how it works inside out. We know the pros and cons. We know all the players. And maybe we have a corpus of telco data that is going to drive this really cool AI model we have. With the current state of the art, you can create synthetic data in all of these other verticals, and you almost wind up with these software platforms that can start deep in a vertical, and with AI start jumping into other verticals much easier than in the past. So it creates an opportunity, but as investors, it requires a lot of thought and analysis. Back to, like you said, do you need hardware to sit on top? Do you need a full kind of top to bottom stack? You get this question whether AI or not, but wouldn't Google just do this? I used to get this question every time I would look for money. And now the question isn't so much wouldn't Google just do this, but it's wouldn't anybody do this? Because It's becoming easier and easier to take an idea and use AI to fast track bringing it to market. It may not be robust, and it may not have the kind of deep architecture that you would need to take it to the enterprise, but it's enough to get it off the ground and prove product market fit in many cases. And so it is changing the landscape quite significantly.
Well, Jeff, this was a great episode again with you. We are very excited to have you as part of GreenSky. I think you're going to do amazing things together. I'm seeing a lot of our founders are already using your time to learn more and to just better manage their operation. Your experience is amazing and handy, and I'm very grateful for the time that you spent with GreenSky Ventures podcast for the past 3 podcasts. And I think this was not enough, and we should have you back again to talk deeper about any of these topics. I think I said it off camera as well that we should write a book on all of these experiences. It's just like very helpful for a lot of the entrepreneurs. But I really appreciate your time.
Yeah, happy to be here, and I'd say wouldn't want to be anywhere else. It's been a great 6 months, and the future looks bright.
Awesome.